Hi, this is Vijay Bamvani here, and in this video I want to clarify a few things and also answer a few questions that my viewers have asked me either in the comment section on YouTube or asking me on my social media pages. Now, why have I suddenly become circumspect in the market? And since over 10 days, why am I telling you it might be time to do nothing, don't buy? I'm also talking about the NASDAQ whale. I'm talking about a very narrow market. I'm talking of a few stocks lifting the headline indices up. So I want to share with you the why of what I am saying. The why is basically the crux of any argument. So here it goes. You see, I depend pretty heavily on our in-house statistical trading model, which we formulated after a trial and error and learning from trading the markets for decades. And we basically rely on statistics for a simple matter that there is no overhang of emotions. There is no such thing as subjectivity. If or maybe, should we, can we wait? Statistics doesn't really believe in that. It's cut and dried. It's either a yes or it's a no. So ambiguity is cut out, objectivity is brought in. Now what I have noticed over the last 10 or 12 trading sessions is that even if the headline indices have risen, the market breadth is not really all that impressive. By market breadth, I mean the number of gainers versus the number of losers, which tells me that only the index heavyweight select companies that push the headline indices up or down are seeing all the buying activity. The other counters are basically not really enjoying all that much of the sunlight. If you are holding stocks in the delivery segment, in the small cap, mid cap, micro cap, the SMEs, etc., over the last 8 to 10 trading sessions, you would have noticed that these stocks in the cash segment aren't really doing too great. Now, this is a sign of the bulls showing signs of fatigue. Does it mean that it's the end of the bull run? I'm not saying that yet, because it's a little premature. You will only know when a previous swing low on headline indices is violated. As we speak today, on the 9th of September, when I'm recording this video, the previous swing low on the Nifty 50 is 11,111. So 11111. Only if the cash market Nifty starts trading below this level will you actually go out there and raise a red flag. Till then, let us assume that it is a corrective phase. But the correction is for real. I'm seeing the market breadth being pretty poor. And what happens when the markets are going up is that the volumes tend to be lower. And when the markets fall, the volumes are higher, both in the cash segment and in the derivatives segment. The other thing is statistical beta. Now, if there is any one metric that I would swear by, and I would put my company's money on a single metric in the market, I would put it on statistical beta. Now, the statistical beta, when the markets are rising, tends to contract, which means the vibrancy in the market tends to be lower on upthrust days. Look at the days when the markets are falling. Even a one single session decline sends the beta up zooming. Now this is called, in statistics, this is called volatility clusters or volatility spikes. The volatility actually spikes on days that the market is falling, which is, according to me, not a very good sign. And there's an old saying in Wall Street, the markets go up the staircase but come down the elevator shaft, double the speed. There's a reason. When the markets are going up, they are laboring against the selling pressure of the bears and the delivery-based sellers. They are going up on the limited resources of the bulls who have to keep buying and raise the prices higher. And thirdly, they are fighting the forces of gravity. Anything that goes up has to come down. Now, the last time I mentioned gravity, There were some wise guys who said stock prices cannot react to gravity. Its stock price is not an animate object. Do Google search the concept of center of gravity oscillator before you post any comments. Right? So it'll cut short a lot of your doubts or ambiguities, and the center of gravity oscillator is a good one. You should learn about it. And when the markets are falling, the bulls have run out of money, the bears are sharpening their knives and shorting the market, and gravity is pulling prices lower, which is why rallies are slower, declines are faster. And the market might take a couple of weeks, if not a couple of months, to top out, because invariably a rounding top is more prominent or a more frequent phenomena before the markets tilt over and fall as compared to a V-shaped recovery in a bear market. Markets tend to sell off in a bear market and then recover very sharply. October 2008, or you can even look at the post 9/11 decline and a V-shaped recovery. So sell climaxes result in V-shaped recovery, but tops are made in a very lazy rounding arc formation because the bulls have had a lot of money and they have a lot of vigor and power to pay for mark to market. They've enjoyed a bull run for an extended periods of time. So they give in very, very late after putting up a spirited fight, which is what I suspect might happen. I'm using the word might here. I'm suspecting it might happen here, and the bulls will one fine day suddenly cave in, and that's when the markets might just fall down the elevator shaft, which is why I think it is my duty to warn you, to forewarn you as my reader, that maybe it's time to lighten up your commitments and go easy on your portfolio, because the markets just might surrender a little bit of their recent gains. Now for a couple of questions that people have asked me both on YouTube as well as my pages. If I am so circumspect about the market, why is Equity Master recommending buys in their other schemes as compared to my videos? Look, make no mistakes. Equity Master has a whole lot of different products, and most of their products are for long-term value investors who pitch their tent in the market, who dig their heels and think long-term. I'm one of those wicked guys who live and die in the market day in and day out, and I'm thinking like a trader. If you ask me what's long-term, I'd say long-term is tomorrow. For me, every trading session is a battle by itself. So when you're talking to me and I'm expressing concerns as a trader, not as an investor. Please keep a Chinese firewall between the two services that you're comparing. I'm a short-term or a micro-trend trader, and Equity Master's other products are long-term investments. And which sectors do I feel should do well over a period of time? I feel any sector that caters to basic human demands, food, shelter, clothing. Shelter is of course out, that's real estate. So food, clothing, pharmaceuticals, basic necessities of life which people need. So if I see a company that's manufacturing non-discretionary products that a consumer does not have any choice, right? Say for example, toothpaste, spectacles, medicines, eye drops, footwear, etc., etc. I think it's time to go back to the basics and think like a caveman and build a portfolio accordingly. And like I said, this is a phase where your first priority should be capital preservation, should be capital protection, and not alpha. I was the guy who in the month of in the month of April, May and June told you that the market data is positive, and markets either in the Copox oscillator video or in the economic data 4 video points that I mentioned, It did seem a little bizarre to a couple of people, but remember the markets rallied thereafter. And I'm the same guy who's telling you now it's time to take a little bit money off the table. Whether you want to or not, it's your call. But as far as my statistical model is concerned, it's flashing a few lights that I wouldn't ideally want to see in my portfolio. So let's be careful out there. It's your money, actually not even your money. It belongs to your family, your children, your spouse, your parents, etc. So let's not lose it in the market to excessive optimism or excessive greed. Let's be a little careful out there. On this a cautious note, I'll bid goodbye in this video till we meet again in my next. Do take very good care of yourself, your friends, your family, your trades and investments. Have a very profitable day. Thank you for watching my video. Vijay Bambwani signing off. Bye-bye. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.